Alrighty. Alrighty. Doc here from North America. We had our summer, I guess it's the beginning of summer almost. I guess we got summer in about 3 or 4 days, I believe, in the United States. So pretty much to me, this is the summer. And we had our first June holiday. I like that. It was fun. It's just like having 4th of July in July. And unfortunately, we don't have an August. August is the first. It's in September, unfortunately. It's at the end of August and the beginning of September. But a holiday a month does not break my heart. As a trader, it's nice to know that the markets are not moving and, it's just kind of dead on some level. And, it's no matter what, as a trader, you basically... when during the trading week itself, you have a hard time not paying attention to where the market is, even when doesn't matter how much capital you have or, how much experience. I mean, you have some experience or enormous amounts of experience. Hey, Robin, how you doing there? And so it's definitely a challenge to be away from the market on a trading day itself. And so, I was talking to some of the old traders down in Florida now, the ones that have defaulted to going to Florida. Defaulted, I like that. Defaulted to Florida. But they're up here half the year too. So, I mean, it's like a combination here and there. And to me, it's like, if I lived down there, I wouldn't be able to get anything done. Nothing done at all. I mean, it would be like perpetual... I'd be the flower, and there'd be bees all over me all the time, wanting to talk about this. I called down there, and next thing I know, someone's suggesting some type of website. I was like, oh no. But anyway, here we are. There's the dollar index on the beta platform, as you can see right there, and let's put it up on the regular daily platform because it's with this holiday in the middle of the week. It's got some strange data trying to jump in there, no doubt about it. That's what's the only disturbing thing about it all. And so you can see it's doing the right thing this morning. It looks fine. Look at the regular platform. It's got 4 days going on a 5th day in a buy, and the weekly is a solid 3 full weeks in a buy. And you go over to here, you see the same thing. The fastest 3 weeks in a buy, and the slowest 2 weeks in a buy. And you can see this dance that's going on up in here where it was buy. And then yesterday, is that yesterday? That is yesterday. So don't even know how to take that. We try not to take it serious, so we just consider this still in the buy from there. Let's steal this buy. There must be a buy I can steal from somewhere. Let's see. There's a buy. Let's steal that buy. And right there. No, not that. There it is. And that's the buy right there. And we're not taking that serious solely because it barely was trading that day. Yesterday. Barely trading. No, I don't want to do that. I want to keep it wide like that. That's better. There we are. So that's the action we have going on there. And the beta platform, you can honestly say it picked up on it very comfortably. And so that is what it is. All right. And then let's see what's in the news this morning. I like doing that, jumping off to the news a little bit and then going on to the euro and the cable. And I understand the Swiss dropped a 0.25 percentage point or something like that, lowered their interest rates a little bit. Again, great inflation fighters. They know what they're doing. I can't compliment them enough. They could have been dumb and stupid like our administration, our Federal Reserve, our finance ministry, or as we call it, the Treasury, that tried to tell us that this inflation was transitory. It's like, no, it's up over 20% from when Mr. Trump left office. So, no, 20%. Ouch. And they keep on borrowing like as if interest rates are at like 1 and 2%. They could be borrowing at 4.5%. They're choosing to borrow at 5.25%. It's not their money; it's our money, and for some reason they just think they can piss it away. It's the strangest thing. Everybody keeps on saying, "What is wrong with Yellen? Why does she keep on floating 30 and 90-day bonds?" It's like, you know what? The no doubt that interest rates are transitory, and there's no doubt they're going down. But this pretend thing where they're going to drop 7 times a quarter, so that's 1.5. So the 30 and 90-day bonds will drift down into the threes, and they could be borrowing at 4.25 and 4.125 and 4, even as high as 4.5 versus 5.25 and 5 3/8. Stop it, Mrs. Yellen. You're transitory. You're going to be gone soon. All right. Let's see what the news says today. Access Central advantages with zero. Okay. Let's see what it says here. U.S. stocks at all-time highs. NASDAQ futures gains for 8th day after SNB unexpectedly cuts rates. That's the Swiss National Bank. And so, that got them all excited. They think if the Swiss can do it, we can do it. Yeah, but you're not fighting the inflation the way they're fighting the inflation. So, it's like, go back to school. I mean, there's no doubt about it. Our Department of Justice is transitory. Our FBI is transitory. Our Treasury Department is definitely transitory. And our Federal Reserve is transitory. They make no sense whatsoever. We talked about it. I guess it was it Monday or Tuesday? I guess it was Tuesday. Yesterday was Wednesday. And we talked about how the bank, the 5th largest bank in Japan, is now under the guidance of borrowing and so forth with the Federal Reserve, because obviously the Bank of Japan doesn't have the horsepower to take care of it at this point. So, they are on the short list of foreign entities that get overnight money from the Federal Reserve. And we showed you that that article, I think it was Tuesday, and it's just the classic Federal Reserve spending money it doesn't have, to prop up. They have to prop up everybody because they are a template to the Democrat Party at this point. In other words, every Democrat votes together. People go, "Wow, they're so smart. They're all together." It's like the only reason they all vote together is because the Democrat Party pays for them to vote all together. All right. Whereas Republicans, a lot of them are independent. They pay for their own campaigns. They run their own campaigns. They're an independent entity representing their population, their local neighborhood. But here in the Democrat Party and the Federal Reserve, in other words, the Federal Reserve works the same way as the Democrat Party. In other words, they've bankrupted the planet. All right. Everybody's pretty much bankrupt on this planet now. And the Federal Reserve is the last man standing. And so what do you get out of that? You get, if they bank like Barclays or Lloyd's of London or Deutsche Bank or, where else is there? Bank of Scotland or Santander, they get overnight money for free from the Federal Reserve. And they're doing that to everybody. Even hedge funds are getting free money. $1 billion hedge funds are getting free money overnight just to hold on to the positions, so that they don't sell them down, so that the markets are just cruising along like 30 times now this year at all-time highs. And I think it's the 8th day in a row of all-time highs. Is that what it is? Let's see. Let's take a look at that article again. U.S. stocks at all-time high. NASDAQ futures gained for the 8th day. Yeah, 8th day. And I think the S&Ps have been somewhat close to that too. It's like, and it's all free money from the Federal Reserve, who is borrowing and printing it and generating, what do they call it? Inflation. And so, this is just another day in the neighborhood of crazy. That's what it comes down to. And another, welcome to my neighborhood. And this is the neighborhood of financial disrespect of free markets. It's disrespect of free people. It's like do as I say and not as I do. That's what it comes down to. All right, so that's the two big news stories right there. What's this one? Ex-CDC director: We will have a bird flu pandemic. Just a matter of time. Okay, so they're going to just have one. All the world trillion-dollar companies in one chart. Oh, right there. So Nevada is taking out Microsoft at 3.34, at 3.2, and Apple's at 3.29, Alphabet at 2. These are the trillion-dollar companies. They supposedly, I heard it again this morning, and that is that you see all these companies, to a great extent, the market's being held up by all of them and making new all-time highs through them, and something like hundreds of major companies are not anywhere near the all-time high. Boy, talk about that cracks me up when somebody in the financial industry goes, oh, Citibank, we're looking for it to be at $70, and I'm saying to myself, $70, the all-time high is like $600 and some odd dollars. I mean, it's like all the time they're always telling you how Nevada is going to be higher at its all-time high, this month, and then 2 months from now they'll tell us again it's going to be at all-time high, and it's going to be just another number like that, and then you go and look at Citibank, I guess you could say they're one of the wards of the the state. They're a ward of the state, and that is the Federal Reserve is the responsible party, and that is still collapsed from the 2008-9 collapse of the financial system. So just like Bank of Scotland or Deutsche Bank or Barclays Bank or HSBC or Santander, I could go down the list. Lloyd's of London, it goes on and on and on. All right, I've got that off my chest. This is why I do the webinar. I need to bring some reality, not just think it. I got to say it out loud and document it. And so now it's documented for posterity. Excellent. All right, so from there, let's go take a look at the euro. See what it looks like on here this morning, on the beta. It's been a little wonky lately, right there. And there is, you can see this downwardly drift we've been having with the euro against the dollar. You see we're on that second week of a weekly sell there. Let's put it up on the more efficient platform when it comes to that specific product. Right there. And let's show you. Oh, you can see that. You didn't see the other side of it. Okay. Oh, maybe you didn't even see that news I was pointing out. I don't know. Either way, there it is. There's the euro. And you can see there the euro is trying to climb back into the sell after 2 days in a buy. And yesterday was more of a holiday. So it was a holiday. So, it was like kind of a dead day. I hate the charts because of it. It's always irritating. I feel like I should just delete that day altogether. But where you see there is it's on its second week also. Right in here, there's your second week. Right there. And it's trying to push into the sell just like the beta was doing. I don't think I showed you that. Let's put the cable on the beta. And we'll go and do two of them together. There is that, and then there is that. So you can see there it's trying to, it went into the sell there, buy there yesterday. I can't respect that just because no one was around, And so, I mean, the U.S. markets are 70% of the volume. So it's awful hard to take anything serious when we're closed. And then over here you can see on the beta, looking the same way. You can see it's playing with the weekly sell for a couple of weeks there. And you can see it's pushing itself back into the sell there. You can see the big dive down. So. It's like just a slow, steady burn. That's pretty much what it is. Slow, steady burn. And then from there, we go over to the true inflation fighters. The CNB, the Swiss National Bank. And it popped it up. Isn't that interesting? So they cut the interest rate, and so, of course, their currency should lose against the dollar. But, it's it's playing with. It's got a green and a red, and I don't think it means a lot more than just a little bounce, because you can see the weekly. See down in here, the weekly's been in that cell for a while, and as much as the fast is moving up, it's not moving up that fast for a Thursday. Be something if it was breaking the manifold right there on the negative side. The slow could care less. It's like a honey badger. It don't care. And that is the action of the Swiss National Bank, and how they lift the markets up that way. And then we will slide now over to the yen. Let's see what the yen is up to. And right there, yen is heading back to that 60 area. The Federal Reserve can do many things, but when it comes to longer term situations, it has issues, The Nikkei was up for the second day, so Japan is feeling okay. I guess this is inflationary. As this moves up, that's an increase in inflation, and so in other words, our currency buys less, and you can see it's in a weekly buy for 3 weeks here, and just pushing up, and the fast is above the zero line all that time. And you can see the slow has been over the manifold itself. So they're not being hoodwinked. They know, they know that the Federal Reserve is propping up some of Japan. And I think there's even, I'm not even sure exactly, but I could have sworn we talked about it here many months ago, where they were propping up a Chinese organization indirectly through the United States into China. In other words, it does that to every country in the world, because as long as you believe in the dollar, like the Democrats, as long as you vote the way we tell you, we will finance you. And that's pretty much what the Federal Reserve is doing, because it's full of Democrats. It's all Democrats running the Federal Reserve at this point. And so it doesn't make any sense whatsoever. They say that something like 2% of the employees are Republican. Something crazy like 96, 98% are Democrat. And it's you can see how bad it is. The Federal Reserve is making it very easy for the federal government to borrow. They've borrowed trillions, and they've spent half of those trillions. The other trillions are just sitting there like a slush fund, like a savings account for them to piss away somewhere along the line. It's going to be very, very fascinating, especially when we get through the month of July going into August. Mr. Trump is polling some places really high, 9%, 12%, 18%. It's going to be fascinating, totally fascinating. I heard a big kingpin of the Democrat Party, another one of them in New Jersey here, is being indicted. It's probably because he's not willing to play with the gang. He's not willing to play, so they'll go find something that they're all a bunch of criminals, the Democrats, it seems like at this point. So, in other words, they want them to be criminals. This way, they'll stay in line. Take the money. It's free. Don't worry about it, and you can retire whenever, and we'll put another horse in there to ride. And they just indicted another Republican a couple days, like a day ago, and I'm waiting to see it on the news. Have not seen it on the news yet, really playing it up. And so because the Democrat in particular that they have indicted for fraud, no less. Again, same thing as they did with Mr. Trump. Basically is capable of keeping the media quiet about it on a local level. So it's fascinating. It's going to be a real dogfight. So, from the yen, perfect evidence of the Federal Reserve propping up one of their major banks, and just the whole thing. You can see the poor currency is pulling a great, what I call it, the great experiment look. It's going from basically 1 and trying to head to 1.5, which is a big move. That's a 33% move, basically. And that is really what it's starting to come down to. We're seeing that in a lot of places. Anyhow, let's jump over to the Great Experiment. All right. All righty. And there it is. There's the Great Experiment. At the top end of its, what I think is its basic range at the moment, trading in the 35s. We went into a buy, and then we went into the sell right there. Let's put a sell in there. I thought I had one in there. And yesterday it did the same thing, basically open and close the same way. The highs were all over the place, but no one really cared. And then today they're trying to jack it. It's almost into the buy. It's minus 0.0094. Just came down from 9.7. So it's trying to get into the buy. Now it's 0. Oh, look at that. Minus 0.101. Now back to 0.097. Keeps on flipping and a flopping and bouncing and a twisting and a turning and so forth and so on. The Great Experiment. They're like trying to show you what not to do economically. The currency's gone from 1 to 35. It's definitely don't do what they're doing. Use them as an example of great experimental finance on a global basis. And don't do what they're doing, and your economy will be better. It's pretty hard to figure that you could outdo what they did in the wrong way. So we'll see if anybody joins in. Currencies really should move like the way that yen does in some aspects. In other words, going from 8.80 or 8, right around that area, 7.8, working its way up to 1.62 over like a 4-year period. That's okay. So basically, it's doubled. Where we're looking at the Turkish lira over the same time period has gone from 10 to 20 to 30. That's tripled in a demonstrative way. Ouch, mommy, ouch. Yeah, no more than 4 years ago, this poor thing was trading in the tens, I believe it was. Let's go and see. Yeah, back in November of 21, the yen was down in the 90s area, and it had been even lower. Let's see if we can show you more, but look at that. Look at that. This is around the 11 area, and now it's at the 36 area. Brutal. Just brutal. It's like they used to call it hyperinflation. That's beyond hyperinflation. That's what are those rockets that they have that go at 7,000 miles an hour? That's what that is. And then if we go back to the yen, let's go see the yen. When is that? That is 22, and it was trading in the 130s. That's when Robin and I started saying, well, this thing's going to break the... well, no, that was before that. We were talking about it breaking the... let's format that. Right there. There we go. Let's see what that did. I just want to go back to 21. There is August of what? I must see November. What is November? There it is. There's a January of 21. It was trading at par basically between 100 and 102 and 104. And I know that before that, it was down in the 80s and the 90s. So, you're looking at a doubling of that currency in the same time period. A tripling, of the Great Experiment. And you can see here, these guys have picked up like a 33% move over the same time period, which is still not that bad, really, compared to, going from 11 to 36. versus 102 to 162. I'm sure the Turkish people would be very happy with that. The Great Experiment. That's what it is. All right, so let's go back to the Great Experiment right there. That's done. We see that it's trying to climb into the buy. It's at, oh no, look at that. They're doing their best to bring it down a little bit here today. It's hit the top end of the range, as I said at the beginning of this. So, they'll just bounce and dance around for a little bit like that.
Market data connection
let's
loss.
go over to the South African Rand. A little bounce up
Market
today.
data connection
A little surprise, but
re-established.
nothing major. It's in a sell. The fast is still dropping like a rock. The slow is just flat at this point for the second week. And, what that really reflects more than anything else, it just reflects the action we're seeing in gold. With this downwardly sloped, gold should be moving up. And we have gold up, nothing major, but, up about $15. Let's take a look at it right here. There's the gold. And it's up from, I guess it closed on Thursday at 344, and now it's trading at is that 61 or 51? 51. So, it's about $8. They've had it higher. They got up into the 56 area, something like that, 58 area, I think, really. So about $14 at one point. Still in that weekly sell. The only thing we see is anything, besides being in a daily buy now for about 7 days, the only thing that looks good here is you can see the fast is broken the slow and broken the manifold. And is right on the edge of, it's at minus 0.70. So it's getting really close to turning into the plus side. So it means there's some buying going on. And then when you go back to the South African Rand, not that, right there. South African Rand, you can see that right there. It's been gliding down. It's a little higher than the day before the holiday. And then over here, you can see it on the beta. Mr. and Mrs. Beta. On all the little betas. Right there. You can see that. It's brawling its way. It's been in a daily buy on that thing. Same way, 7 days. And the weekly right down there is pushing into the buy. You can see the fast closed in it last week. And the slow now is joining in. So the data on that, the input where we're collecting the information, is doing really, really good. I like that. It's something. What else can we say about any of that? Futures flat ahead of the opening. Okay. Yeah, the 10-year Treasury is trading at 4.28, right? And Mrs. Yelling is, instead of borrowing at 4.28, she's borrowing at basically 5.28. It's like, what's the malfunction there? What is the problem? Holding up short-term rates, let's see, if you're borrowing it means you're selling them, which means people don't want to buy them, and the price drops, which raises the rates. So it's like totally dysfunctional. Totally dysfunctional. All right, now from there, we go over to silver. Let's see what the silver's doing. We can always jump back and forth when it comes to looking at the action in the South African Rand. There, you see that? Let's see. Let's go to silver. There's silver. Silver's lifting up again too. It's in the daily buys, but in a weekly sell, just the same way gold is in a weekly sell. So there's gold in the weekly sell. And we can't see that. Let's do this like so. So gold is in the weekly sell, and so is the silver. There's the silver, and it's lifting up today. It's been a daily buy for a few days here now. and just a little pressure there on the longer term view. I guess it's so hard to say who is pressuring it. I always think it's the Federal Reserve because they do not, remember, I remind you how funds work, how hedge funds work by the law, not by my fantasy, but by the law. And that is when you incorporate a hedge fund or you incorporate a mutual fund or if you incorporate a retirement fund or just a investment fund, you have a incorporation manifesto. And if you do not follow that manifesto like law, then you can be sued. And you say, because they're losing money? And I go, no, because they didn't follow the rules that they claimed when they incorporated. And I said, well, what about if they're making money? It's like they sue them anyway because it's easier to sue than to make money trading. So that's what they do. They sue. And so when you're looking at silver and gold in particular, they feel the pressure because a lot of all the funds on one level or another mention gold as an identifying value for inflation. Okay, so they look at that and they go, okay, if gold is up X percentage, then you should only have a certain amount of percentage of stock in your portfolio, or it should be hedged, one or the other. Okay, either way, it puts pressure on the value of the stock, because if you're told to liquidate some of it or hedge it, it will put pressure on it on some level. All right, and so the Federal Reserve doesn't like that. It wants the funds to stay at all-time highs, especially with the election coming. They want people to look at their monthly financial reports and go, well, I'm doing better now than I was last month. It's higher, so that's pretty good. And so that is part of the reason that we see these all-time highs over and over and over again. And it's not because of good policy. It's not because the economy is growing. It's not because the corporations are knocking the socks off of returns, because we see it totally at this point. That it's all come down to they're just not, most like some crazy number, 70-80% of the stocks are nowhere near all-time highs, not even close. Like 90%, I heard this morning, are not near all-time highs. It's just a small percentage of the market that's there. The rest of them are standing still. Why? The Federal Reserve gives all these investment organizations, be it hedge funds or mutual funds or retirement funds, they give them overnight money for free to hold on to their positions. So as long as you're holding the position, borrowing it, or holding on to it for free, then all you have to do is, because you bought it, all you have to do is hedge it. Because it's not your money, it's somebody else's money. I'm not talking about the investors. I'm talking about government money holding up the stock market. This goes on over and over again. I know you probably go, why is Doc saying this stuff? And I don't hear it on the media. Very, very small amount of the media is free at this point. In other words, most of them are owned by the Democrats. So CNBC is owned by the Democrats, and Bloomberg is owned by the Democrats, and Reuters is owned by the Democrats, and Yahoo Finance is owned by the Democrats, and it can go on and on and on. So it's very rare to, Fox Business is not owned by the Democrats. It's one of the only financial channels now that's not owned by the Democrats. And when you watch I watch them. I have them on side by side on screens as news tape nowadays. And what they talk about on the other channels compared to what they talk about on Fox Business is night and day. It's amazing, simply amazing, and it all relates to why there's pressure on the metals markets and why there's pressure on the stock markets. And I have to get this off my chest day in and day out, because as a trader for 45 years, I cannot put up with the idea that the markets are that manipulated now to the point where, and it would be one thing if they were manipulated and it didn't cost the American public any money, but we're $34 trillion in the hole. So it's not, it's like, no, your manipulation's costing us tons of money. It's wrecking our economy. And so in relative aspect, it's, in other words, an American economy wrecked is nothing like the rest of the world's economies. Those things are dead from the neck up. So, all right, that's why we get away with it, because we're like a walking zombie, where they're just like bacteria in the ground at this point when it comes to their economies. That's why we saw, and let's go back to that too. That's why, and we talked about that. We've had webinars on all these subjects, so I have them for posterity. Here, you go over here and you look at the energy company down in Spain. The moment that the parliament switched from socialist to center-right capitalism, one day the product went down from 25 down to 21, and it's been drifting slowly to 20. Okay, just in one day. And that is what I'm talking about. And that's, you're not hearing, I'm sure you're not hearing people tell you, oh my God, look at that, the European Union now is center right. No, companies could start to grow again. You're not probably hearing it, but you would think when we go and look at like the stocks 500, something like that. No, that's not it. That's the Shanghai. Where's the stocks at? Right there. When you look at the stocks 500, was it 5,100 when that news came out? It dropped down to 48 and change, and now they've come to their senses over the last 4 days and have realized, hey, guess what? It was at 4,825 down in here. Let's just show you. This is that election right there. They panicked. They sell it down for 2 days, and then they start to realize, oh, wait a second. Maybe, it's right there. You see that low of 4,819. We'll call it 20. How's that? 4,820. So at 820, and now it's trading at today. There it is. It's trading at 930. Okay, so after panicking down from the 5,000, what is that? Right there, the 5,030 area. Okay. And now it's at, it's only 100 points away from it at this point. And so before you know it, it'll be lifting through there, because they'll start to see that there's going to be profits in private companies again. And so that is going to instigate more buying in Europa, because they're going to start to become free markets with free people. And that is a good thing, not a bad thing. One size does not fit all. All right, so from there we'll go over to the copper, the industrial metal copper. Let's put it up on the screen again. Right there, and copper's trying to lift up. China is definitely having its issues. And let's take a look at the Hang Seng. Hang Seng is kind of down in its lows for the last, I guess you could say the last month now. Last 40 days, something like that. Let's show it to you on the screen here. There's the Shanghai. Not the Hang Seng, the Shanghai. I'm sorry. It's the Shanghai. It's been down. You see it's dropped from up in here all the way down to taking out this low and that low. And the weekly's been in a sell now for a good solid 5 weeks. And that's usually what copper is trying to tell us when we see copper drifting like that too. That slide down. It's representing how poorly or positively the economy is in that country. Show. Last but not least, we jump over to the last industrial metal, and that is the most dangerous short in the world as far as I'm concerned, and that is platinum. And there it is doing that same bounce just like copper, and it's in 3 weeks in a weekly sell. So the pressure is on there. And let's see, how's it look on our beta platform? PL. It's got the expiring contract, so it's not really reflecting very well. You can just see it's got the 3-week sell going on because they haven't updated. I got an update that. That's why it's so spotty in here. From there, we move our way over to the energy sector. And we get done thinking about the South African rand. And there is oil. Oil has been one solid climb. Not exactly, I mean, we saw the selling with, where is it at? Let me just get rid of this. I'm going to close that. Yes. We're going to put crude oil up over here. Doing the same thing. You can see that nice big climb just like on the last platform. Climbing into the weekly buy this week there. And you can see the daily's been in a buy for about 9 days now. And over here on the beta, got that same game going on. What is it? The 5... It's like 10 days going on 11 days. It's not 9 days at this point. And we are on the 3rd week of a buy there. And not only did the fast move into it, the slow moved into it. They both moved in together, picking that low. And that's why we're working on this beta. It's even more efficient at times than our old platform. And then we go over to Brent. And there's the Brent. Oh, what do you got here? Just hold on 1 second. Need 2 hands. There we go. There we go. Ooh, Robin, I didn't realize that. I was out in the field working. I just realized it. You called. Sorry about that. Let me just see what you called about. Come on, telephone. I was out there putting plants in. I was running a cultivator. I just checked my phone in the middle of the broadcast and saw you called. I was out there cultivating and putting tomato plants in and pepper plants.
No, no worries.
Okay, just making sure it wasn't anything important.
I'm hearing you talking. There must be a delay.
Oh, okay. I'll check it. I will talk to you in a little bit. Let's see. Is there a delay? Robin says there might be a delay. Let's see. Oh, it's not that much of a delay. Just a few seconds. Okay. All right. So there's crude oil. Now there's Brent. Brent has been doing the same thing, showing that nice strength. I guess if you're long, of course. And then, let's do this. Let's go down and look at the Aramco stock. It's kind of fun to be able to cross-match some of these things that are going on. See, the Aramco stock keeps on dropping as the price of oil goes up. You would think it would do the opposite, In other words, you would think Aramco stock would be more valuable as the price of oil goes up. I'm a little confused by that. You can see the stock must be overvalued. I guess that's what it is. So you can see here, it's been in a weekly sell for 9 weeks. And the Aramco stock was up in the $30 area, and now we're down in the high 27s. So, basically going back to, when was that? In between the 19th and the 26th, somewhere's around in here. Went into the daily sell at the 26th, right there, and I think they pushed the stock out at that point. They sold another $100 billion worth, and so right here. The weekly, it was anticipating it a few weeks ahead of time. They knew it was coming. That was probably when they finally, insiders found out that it was coming. They sold it down. The investors bought it, thinking, ooh, cool, a bargain. And then, smack-a-doodle. It may be worth going back and looking at this product, even further back, just to see if we can get an understanding what the fair value really is. So let's go to something we can see it on a long-term basis. Is it 222? That's our Arabian. There it is right there. That's it right there. Now let's take a look at it on a longer term chart. Where's the chart at? There's a chart around here somewhere. Oh, there it is right there. Let's take a 1 year look to it. Let's come down from the 35 area. Ow. All right, now let's go to a 5-year period. 5-year, oh my goodness gracious. How about that? It was down in the 22 area. Back in, when was that? In 2020. That's 4+ years back. And then it ran all the way up to 30, almost 37 right there. Was that the highest? 38. So from 22 to 38, and then I guess that's when Biden won, right? So Biden wins, the oil market goes exploding up to 100 or 120 or whatever it was, something like that. And then what you have is you have it selling off a little bit in 23, and then it climbs back up again. So where was oil in 20? Let's see, was that 20? 20. Okay, so that's Trump years. So oil was like, 40, 50, 30, no, 30, 40, something like that. So what are they trying to tell us as they drop down to here? Are they going to... I'm confused altogether. You would think that with the price of oil going up, this would be going up also. But it doesn't seem to be doing that. Let's see if we can put a different product in there. Like, say, crude oil. There's crude oil. It doesn't really go back that far. There's 6 months. There's 1 year. There's no 5 year. Oh, there's 5 year. Okay, so back at that same time, oil was in the $20 area. Okay, and then that high, it was in the $120 area, and I guess it's taking out these lows here. That's so curious, It's taking out those lows. So it's kind of odd. I'm not really sure what's going on. I guess they liquefied it more with $100 billion. Didn't they float it for like $1 trillion or something like that? Or was it like something like that? I think that it was the original float was like $1 trillion. So $100 billion more, or 10% more, is pushing the product down way more than 10%. That's for sure. Let's go back to it again. Curious. Trying to figure out the value. So 1 year like that. There it is. So it's come down from the 35 to the 27. What is that? That's like a 28%. Is that 28%? It's not 10%. That's for sure. Let's see what. Yeah, that's pretty tenacious. That's like 37%. Not sure what the issue is about that, but they surely don't want to buy it. That's the interesting thing. And I guess you could Fibonacci the 38 to the 22, and then the 50 percentile down is 16, so that'd be $8. So $8 off of that is 30, and then you notice when we look at it on the beta. Let's see, where is it at? You notice that $30 right there, right here, that $30 area was just sideways banging away for like a couple months, and then it fell up. Seems to have fallen apart from there, and so now I guess 2/3 from 38 to 22 would be 2/3 down. So that would be 16. So that would be basically $10. And so we're definitely down 2/3 now from it. Is that right? 50% would be, so 1/3, then a half. So a half is the 30 area. So we're breaking the half, and we're heading for the 2/3 retracement. And the 2/3 retracement is $11, which comes around right here in the 27s. So I guess what we might do is see the Arabian what do they call that thing again? Saudi Arabian Oil Company might be just coming down into the support area. So we'll watch it now and see, compared to the way other products are moving in that fashion, Right. So from there, we slide over to, what do we got? We're getting towards the end of the day at this point on the webinar. So you can see here, there's crude. Let's show you it again. There's the crude, making that wild bounce up. And so Arabian Corporation, Saudi Arabian Corporation, should be bottoming in this area here in the 27s. That's what I'm thinking on a Fibonacci count. We'll wait to see our math turn up. You can see the daily turned up yesterday right there. And you've got at the same time, we had a red. We'll see if it breaks this low on our algorithm. And if it doesn't, and then gets a green dot going, and this starts to move up, then we've probably seen the bottom. Maybe they'll bring it back to the 30 area again. Maybe something like that. That's what I'm thinking. Because, here you got crude oil trading at 81.5, basically. So you would think they'd come up and, move in that direction. All right. From there, what do we do? We saw the Spain company. Let's see, we're there. We've seen that. The Spain Energy Company, and it's doing what we expect it to do. And natural gas. Let's see where natural gas is, but I think it's doing a little bounce again too. Right there. Yeah, you can see the little bounce going on there. It tried to get into the buy a couple days ago, and now it's trying to climb back into the sell already again here. And we're still in weekly buys, but the fast is breaking through the zero line. All right, traders, we're going to leave you with a view of, right there, we're going to show you that's the U.S. stock market. It's still up for the day. The Dow Jones Industrial Average is down about 45 points, but the S&P 500 is plus, and the NASDAQ is plus. So, we're seeing the buying going on still here. Dow down about 0.1%, and the NASDAQ is up 0.25%, and the S&P is up about 12%. So, gold's up about 0.25%. Crude oil is up about almost a full percentage point. Bitcoin's up about 0.7%. And that's the action. I say the S&P is up about 20%, about 0.2%, right around 0.21, something like that. And obviously that very weak Russell is down almost 0.4%. CAC is up a full point, and the FTSE's up 0.5 point, and the DAX is up 0.5 point. And so, we keep on saying that Europa might start to look a lot better. All right, traders, we got to come up with a title for this one. And this is Doc from North America. Catch you all tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. See you on the flip side on TGIF, which is, thank goodness, it's Friday, and it was a 4-day week to begin with. Ta-ta for now. But for you, Dukascopy, I'm always here. Wow.